Hello guys, welcome to Highest Traders. I hope we are all trading and I hope you're all making money. So one of the basic things I do in the morning is to analyze the chart and then share the setup with my community. So for those of you that ask me for trading signals, this is the type of signal I provide. I do not tell you to sell or put your stop loss or take profit at a particular price because we are focused on what guiding traders from foundations to freedom. So you have to learn how to do this yourself. All right. Today is 25th of July, and we had this trade on VIX 101s. And based on request, Mr. Samuel said we should come and explain this trade on YouTube. So please watch to the end of the video. I'm going to cover how we filter directional biases. I'm going to cover the internal structures, and then I'm going to cover entries. Please make sure you stick to the end of the video. If you enjoyed the video, please don't forget to like, say your comment in the comment section if you have something to say. Please subscribe to our channel if you are new. Let's get started.
Alright, people, so this is VIX 101s index, and this is the index that Samuel wants us to explain more here on YouTube. Alright, so this is the trade. You can see how price played out significantly into take profits. First take profit, the second one, and then price went significantly below against us, right? So I'm gonna clean the whole of this setup, and then I'm gonna show you guys where I made price and how I was able to analyze to figure out this whole setup. All right, just like someone said, explain. So let's clean the chart and let's get started. So 6 a.m. like you saw in the screenshot there, or the idea I shared in the community, 6 a.m. is where I made price, right? So when I made price 6 a.m., it was this particular bearish candle here. That's when, or that is where I made price. So you all know the rules, right? So we have to look for what last two significant swing lows and then last two significant swing highs. So this is the current side of price, and the last two swing lows before this particular current side is where this is the last low, and then this is the lower low. So this is lower low, then this is lower high. So this particular swing point is yet to be confirmed because it's yet to enter with this one. So this is just what the current, whatever you want to call it. But this is the last swing high and then the last lower high. All right. So since we are able to identify this, we can see clearly that what we're in an uptrend because we are creating higher highs and then higher lows, right? So since we're in an uptrend, first of all, for this swing to be confirmed, we can see that price collected this particular low, right? So that is why that swing became a significant swing high. And after that, price broke significantly above it. Okay, so we have a break of structure here. And since that break of structure we had, price has been doing something like so. We have push, we have what drop, then we have push here, we have drop, and then we have a sweep of that high. That is why we have this significant drop, right? And that significant drop came to collect what our liquidity here. Okay, so after collecting the liquidity here, that is when price found its way to the upside. All right. So when price collected this liquidity, like I said, all of this happened before I woke up because I woke up here. So I was trying to figure out why did price bought from this level. So I had to dive deep into the time frames to see what exactly have happened. Okay. So I went to first of all I went to the 15 minutes, right? So I want to get confluences to see that yeah, price is going up and this is why it is going up, all right? Because price doesn't move without something pushing it. So if nothing is pushing price, it cannot go. If nothing was the signal, traders will not execute. And since traders are putting their money, that is why price is moving, right? So I want to see why traders are putting their money here and why this guy is moving, all right? All right, people. So this is the 15 minutes, right? And as you can see on the 15 minute, we have what price went up, came back down. Price went up, came back down. So in summary, what we were looking at here, you can see that this is another flow, right? And price mitigated the other flow here. This also would have been some kind of pullback, but price mitigated it. But what price literally took before having that push is this particular swing, this particular pullback here. For those of us that understand liquidity, it is what we call engineered liquidity, right? So liquidity is seated there and price swept that liquidity. That is why we are having what this bullish run. And the first significant take profit, since we are having this particular trend, is going to be here, right? Our take profit for this trend is going to be here. When price comes to interact with it, then we will know what next to do. So since we're having this price swept, you have to look at what the next significant swing point. Sorry, the significant swing points that brought price to our point of interest, right? So we have that push, we have this one. So price went up a little, give us what drop because what this supply here, price reacted to the supply and then changed it to demand. All right, so we have break significantly above that structure to this level, right? So this is where we change structure from the downtrend to the uptrend, right? Because we had a downtrend that came to interrupt our point of interest. So price changed structure from that downtrend to the uptrend. And now we have to look forward on this impulse that changed structure. We should look forward something that price is likely to come back to mitigate. Then we can look for continuation, right? And if you see here, you have what this is a what inducement. All of these are mitigating it, so they are not inducement, right? They are not, the right one. So this is the one, the right one. And for trendline liquidity, this is trendline liquidity somehow. So from there, we had these guys order flow, right? The last demand. So this is another flow, right? This is another flow here. So let's go away. Let's do it what 6 o'clock line. So as you can see on the idea I shared, the setup I shared with my community, you can see that this is around where we left price, right? This is where we sent the analysis to them. We're like, price will come to what? Mitigate this guy and then give us some kind of bullish run. Okay. So when price came at first, now this is where we hop on the lower time frame or our entry time frame. So my entry time frame is the 1 minute. For this particular stuff, since the request from one of my students, I'm going to be driving through. I'm going to be showing us everything, both the entry, like I'm going to be showing us how everything was, filtered for me to actualize that trade. Though for me, I missed the initial entry, and that is why my entry is at that level you can see right there. So we are now on the 1 minute time frame, which is what our entry time frame. And on the entry time frame, the first thing we have to do is what? See if we can refine our order flow. Now, this is the order flow we have from here to here. Is our order flow we marked on the 15 minutes, also on the 5 minutes visible. So on the, I think I marked it on the 5 minute when I shared the setup, but I just marked on the 15 minute as well. So this is the order flow we had. Now, if you look at this particular order flow, well, inside the order flow, is there any unmitigated order block or order flow that we can see? Of course, there is one, which is this significant one here. This is a significant order flow on the 1 minute chart or in the 1 minute chart, right? And then if we push that up, you can see the price came here, reacted, came back down. So on our 1 minute order flow, now this is the first entry. After refining your order flow on the 1 minute, the first thing you can do is to what? Put your entry direct and then your stop loss below the lowest order flow, the biggest one, which is from the higher time frame. And then you can begin to look for your targets. That is going to be the first thing you want to do. And then the other thing, or the other way to execute an entry, is for you to see through that the structure have been broken. So after mitigating the point of interest, right, this is what a particular swing, right? So what did price do after mitigating? We have this push down, breaking through this structure, right? Price pull back up and then broke through this structure again. So we have break of structure here, right? So since we have break of structure there, we are having this guy like so as our break of structure. If price continue breaking structure just like it broke this one and then broke this one, if price continue breaking structures, then would have just let the trade roll because it's going to be obviously a downtrend, right? But on the 1 minute, what happened after breaking this structure? Instead of price respecting this particular, supply here, instead of price respecting this supply to keep selling or to keep giving us a downtrend, price invalidated the supply and went up. So price broke through it to create what? A higher high. So this is what, after mitigating, this is a high, this is a higher high, this is a low, this is a lower low, right? But this is where we are having the flip. Okay, so this is what our change of character on our entry time frame. So this is the confirmation entry, right? So this price gave us a change of character. Now this impulse that changed character, we are looking for the significant pullbacks on this impulse that changed character. So we have this one too, and then this was a little bit of battle, and also I won't pay attention to it because it is what, at premium, and we're looking for buys. We cannot buy from premium, so I just let that be. So I'm looking at what, this one and this one. So the entry, you can see very tight. We have what, an order block here that is non mitigated. That is where the entry came from. All right, that's where the ideal entry is supposed to be. This is a risk entry. This is what, a confirmed and reduced risk entry. So if I was there and I would have executed from here, and then my stop loss would have been where, the lowest low of the higher time frame or order flow. So my stop loss would have been there, and then that would have been a risk of 1.1 pip, all right, for VIX 100 1s. And that was the first, and that is like the second entry now, all right. So since we have this price did and that, we have what, like so. This is the first take profit, obviously, because this is what our structure on the 1 minute. So this is the first take profit was taken. Supposed to be what, 1:6.3. Like I said, I missed this entry. My entry was somewhere around here. All right, it was somewhere around here, and I entered that trade because we have what, this structure collected, right? It swept. This one swept. All of these are coming down, but none of them is closing below the swept candle or the candle that sweep. So it is still what, a sweep. Then we have what, a change of structure or a break of structure, whatever you want to call it. And we have what, an order block here that was mitigated. So that is why I entered. But also I still didn't meet it here. I met it a little bit late. So my entry was somewhere there, I think. But this is supposed to be the entry, the second entry. And then the stop loss is still supposed to be there with it. Alright. So this is the second entry. Then the first take profit is still here, 1:4. So if you want to keep riding it, you are going to see reasons for entry even till another entry here. Price broke this high, pull back, collected all of this. This is an order flow here from here to here. Let me write it. So price broke through this high, right? And this is what, liquidity here, and price came to mitigate this order flow, and you can see that that is another entry. So these are the entries, 1, 2, 3, and if you want to also execute this on 4, so we had like 4 entries here that would have made a lot of money from this. So this is ratio 6.35, ratio 4.38, and then this would have been maybe like ratio 1, sorry, ratio 2 point something, right? And then the first take profit, when you are trying to devise your take profit properly, you have to go back to your internal structure time frame or the higher time frame which you analyze from. All right, so let's hop on that time frame. This is the 15-minute time frame. This is the time frame we use when I was just reading it for us. So this would have been, yeah, the first take profit is obviously that one, right? And then this is what the second take profit. So we only took two take profit before price went against us. So 1 and 2. So if we executed a trade properly and we were supposed to execute it, we would have had what, 1:11.98, and then the second would be 1:8.6. So this would have been a massive win, even though price did not respect all our price action. All right. So as you can see, also someone in the community, you can see how he placed his what, take profit. 1, 2 was taken. It's left with what, 3 and then 4 before price took us out. So I hope this makes sense. Thanks for watching and stay highest.